All right. Apologies. Yes, we're just waiting for a few more traders to join in. It's a Wednesday, so we look into the just watching in terms of what the market has been doing. And
So you ask, let's go up.
are you guys good?
Not sure. You never know.
All right, so that's can you, if you, okay, I just want to confirm that you can hear my voice and you can also see my screen. My screen. You can just confirm on the chat box because I just want to make sure. I think the last time we had a sound problem. I think. Oh, also you can just unmute. I think that's the best option. You can just unmute and yeah, so that I know that we can all can hear each other and you can all see the screen. Okay. I think today it's all about Fibonacci. It's also about just watching what the market has been doing since it's Wednesday. To be honest with you, nothing much is happening on the market. It's like very slow and yeah, nothing much, especially if you are trading indices, you're not making any money. Okay, I can hear you, see clearly. Thank you for confirming. All right. In terms of the Fibonacci, as a 20, oh no, it's not the 25th. Okay. In terms of the Fibonacci is a tool that we use mainly to have sniper entries. Sniper entries, what does it mean? You know, when you place an order in a trade, you want to make sure that number one, you've got the best entry point. You've got a best entry point. Number two, you want to make sure you've got a minimum stop loss. You want to have a very small stop loss, you know, if you are trading. Secondly, you want to make sure you can, with your entry, you can maximize your take profits. That's basically what you want to do. So the Fibonacci, what it does is number one, it marks, you know, the important support, important supply zone, the important resistance level, and also supply, demand, resistance, and support. Okay. So with the percentages that are there on the Fibonacci levels, the 23%, the 16%, the 5%, the 11%, the 50%. So these are the levels where if the price is moving, it's more likely to react in those levels. So those levels will give you an entry point, will give you a trade, whether you're going to be buying or you're going to be selling. So hence, that's why I'm saying the Fibonacci is one of the key level. If you know how to use it, you can have multiple trade even in one instrument. Okay, so when I say instrument, I could be referring to a currency pair, I could be referring to a commodity, I could also be referring to an index or a cryptocurrency. So this instrument, you can use it across the board, across all the instruments that are there in the financial markets. It doesn't necessarily have to be a currency pair. Even with the strategy that we use, the strategy that we use is basically all about understanding different instruments. But before we go on, in terms of going further, more examples, I just wanna get some few questions. Okay, if you've got any question you might have, especially with what we've covered so far, before we move on to more examples, please uh, it's that time just to ask your question. I'm gonna give you like 5 minutes for questions, and then we can move on to the session, and then we can do examples using live analysis. Okay. Please feel free, guys, to ask questions, especially regarding the Fibonacci, because this is very important. Okay. You can unmute and ask question. You can unmute and then ask question. Okay. Okay. So we're all clear regarding the Fibonacci. Okay. Okay. No problem. Okay. Maybe let's just go on with the maybe let's go on with the session. Maybe let's do some analysis. Perhaps maybe we have some question on that. Okay. So with the Fibonacci, there are two zones that we are looking into. Okay. The first zone, we call it the mid trend zone. And the second zone is what we call the end trending zone. Okay. So the end trading zone, I think we've spoken about it, that the end is where the price will change direction. So number one, the end trending zone is your 5 level, 11%, 16.8, 16.9%. So those are the level where the price or the instrument, it will change direction. So change direction means what? A reversal. That's what it means. So these are the zones that we are using according to our strategy: 5, 11, 16.8, 50, and 61.8. Okay. So these are the levels that we use in terms of the Fibonacci. Okay. And then in terms of understanding, the 5 to 16 level of the Fibonacci is where you are more likely to see a Quasimodo. Like I said, these are the level of a reversal, head and shoulder pattern, a reversal, a double or triple top, a reversal. And it's very important that you take some trades on these zones when it's still fresh. When I say fresh, I mean a zone that is the first time when the market is charting those zones. Okay. So what happens when the market is on a downtrend? You pull the Fibo from the high to the low. When the market is on a low trend, you pull from the low towards the high. Okay. Okay. So this is basically one of the example. You can see there, this market is what is on the downtrend. So when the market is on a downtrend, you pull the Fibo from the high trend to the low trend. So from that direction, okay? So at the bottom, you'll see your 5, your 11, your 16. And then in the pullback zone is where you see your 50% and 61.8, okay? So this is on a downtrend. You pull the Fibo from the high towards the low. So now, if the market is bullish, meaning the market is on the uptrend, you pull the Fibo from the low trend to the high trend, okay? And you can see the 50% level and the 61.8, even the 38, all these levels, they highlight the demand zone, the supply zone, the resistance, and the support, okay? So basically, so those are the two ways. It's where where the market is either on the uptrend or on the downtrend. Okay. So now let's just quickly go through some examples, and then in between the session, we will take in questions just to make sure we are all in the same page. Okay. So also remember, while we are doing the session on the Fibonacci, we're also going to be covering in terms of more analysis. Remember, it's midweek in the financial markets. You also need to do a review. What is going on in the market? I think on Monday, we had a bit of analysis that potentially we might see a strong dollar this week. And as you can see, if you go and zoom in, this is H4. This is H4. nothing is happening. H4. So we actually marked, this is USD CHF. It's a currency pair. Dollar versus the Switzerland franc. So basically, if you're looking at this, nothing much is happening. This is H1 on US USD CHF. So nothing much is happening. It's been moving on this range. Remember, I think we had one session where we said when you look at the instrument, let's just say in this case, you look at the currency pair, USD CHF, the market is either moving, number one, in the downtrend. So which is what was happening on this case when the market was moving this way from this level toward that level. This was moving in a downtrend. Okay. Currently, what is happening on USD CHF, it is ranging, or we can say it moving sideways. Okay. So once the market started moving sideways, you can expect a break to the upside or a retest to the upside. Okay. So in this case, let's just quickly go on the daily because we are focusing on the Fibonacci. Okay. Let's look at the weekly because you want to see something. Okay. I think monthly will give us a bit of a picture in terms of what is going on this thing here. Okay. Sometimes if you're looking at the instrument and it's not giving you exactly what you're looking for, you go to the higher time frame or even a smaller time frame. Okay. So looking at this USD CHF, we can see that this currency pair is right at the demand of a monthly time frame. So this currency pair is right at the demand on the high monthly time frame. And if you zoom in, you can see just right there, this is the hammer. Where is the hammer? It's right there in the monthly time frame. Okay. Remember that hammer is at the low. So this is the low and these are the highs. These are the highs. These are the highs. So right there at the low. And if you look at that low, at that high, you can see that there is a bearish engulfing. Okay, bearish engulfing. The hammer is right there, right where the price is at right now. BC and a hammer. Okay, so after that hammer was formed, okay, we can notice. Oh, okay, wait. We can notice that what happened, there was a bullish movement in terms of the dollar. Okay, the dollar started moving up. Okay, so the dollar started moving up. Okay, started moving up, and then retest, and then started moving sideways, then again moved up, and then started dropping. So it right there at the demand. So let's go to a bit of a weekly time frame. So since we have analyzed that this is actually on the demand zone, so my expects just a pullback. Okay, let's just zoom in. Okay, so weekly, let's also go on the daily. Okay, so looking at the weekly, so that's the high. Let me show you what I mean, because so that you can open the same page. So this is a point that we highlighted in the weekly. Let's check it at the daily. Okay, so now we said if the market, and this is a very sharp, this is a very sharp drop, and the sharp drop, it means there is a significant orders of sell position. So this is a very sharp drop. Okay. Okay. So hence that is why we are looking at that movement that is basically raging for some time because there was a huge drop. Okay. So now what we want to do is this. Okay, let's go for 1 hour. Okay, let's just use 1 hour. Okay. So I want to show you something. Okay. Because okay. So if we change this into a line chart, we're gonna mark this high and we're gonna mark that low. Okay, so let me just show you so that you can all be in the same point. Okay, so I'm marking this level as my high, and I'm gonna mark that level also, okay, because it's important, because this was a floor some time. This was a floor before the price started moving, and this level, the price broke and it went to that low. Okay, I'm gonna mark this as my other high. Okay, mark that level. Okay, okay. So we said if the price is dropping, like in this case, the market is on the bearish. So the market is moving down. When I say the market, I'm talking about the price of USD versus CHF, which is dropping. Okay. What do? We take the Fibonacci. So this is a Fibonacci retracement from there towards that low. Okay. So I'm going to remove some lines so that you can have only the Fibonacci. And I'm going to remove this too. And that is important. And okay. So now this is the low, this is the high. So I'm pulling the Fibonacci from which level? From this high, because this is a downtrend towards this low. Okay. And if you look left, you can see now this is 5%. Remember, this price has been dropping. So when you start seeing the price pushing up, it means there is a bit of an increase, or the price is appreciating, or this currency pair as an asset is appreciating. Okay, so this is a 5%, 11%, a 16.9%, 23%. You can see there the price is touching those levels, touching those levels. So what you want to do, okay, let me remove this. Okay, so once again, okay, let's put this here. Okay, once again, the significant level is this one, a 50%. You can see then between 50%, there is this zone here. There is this level. So it's between 50% and 61.9%. So that is where you're more likely to see this. The price will touch that level and form some sort of an M. So like that level. So I'm gonna mark this level, like this one here. So remember, as much as we are talking about the Fibonacci, it's also just a weekly, midweek. So in between the 50 and the 61 level is where more likely to see this movement. Okay, and you can see that my entry point needs to be around here from the 69 and 11 and the 5%. That is where I want to have my entries. Okay, so the price from this level is more likely to do this between the 51 and 61 to form like a double top if it's a downtrend. If it's a if it's an uptrend, obviously it's going to be a double bottom. So the price formed like a big M, dropped towards this level and moved again towards this level, stopping out these traders that are around here. Okay, what is the key? Key thing is when the market is on a downtrend, you draw your Fibonacci from the high towards this low, and then you monitor the 11, the 5th, and the 69.8%. That is where more likely you enter your buy, and your take profits needs to be between 61 and the 50, because this means the price after dropping from this level to this level, the price has increased up to 50% or 61.8%, which means that can attract more sellers because you want to sell at the highest price if you are selling. Let's change this into candlesticks. And I want you to note the type of candles where you want to buy or sell. So this is the type of a candle that you more likely want to enter the trade, which is this candle here. Okay, this candle, that is where you want to enter your sell, and it's in line with that candle. Okay, so there was a big push right there towards the upside, and it came back towards this level. Okay, is there a question? What's the question? Oh, okay. 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 So my expectation, this is expectation in terms of USD CHF. Okay. Price goes there. Then you enter your sell towards here. Then you buy here. Price push towards the upside. This is based on we analyze the monthly time frame. Okay. Let's look for another pair. Okay. That has been on the uptrend. Okay. Remember, the reason I'm highlighting the higher time frame is because it gives a clear direction in terms of having a take profit and like clear take profits. And then we use a smaller time frame. You can see here, this is GDP USD the daily, and you can see it did react on that candlesticks right there. This candlesticks, and we can see the reaction. So that's right. There was a reaction. And what type of a candlesticks in that? I think we have discussed this candlesticks before. Okay. Nevertheless, let's look at the weekly. And if you look at the weekly, you can see that number one, because we want to combine everything. Okay. Number one at weekly, this is a bearish engulfing. Bearish engulfing. Okay. So a bearish engulfing, this is where you're more likely to see a sell. Okay. Let's go to H4. Perhaps you can give us a bit. Okay. And this has been dropping. I think we did analyze that this is going to drop. And so far, not much movement. But I think our expectation was that it will drop from that level to there. Okay, so let's go to H4. So we take that as a low, take that as a low, as a high, take that low. Okay, so I think right at the top you can see a very nice railroad track. So perhaps the price can react on this zone here. Can react on this zone and go there, and then makes a further drop. And you can see between the 50 and a 61 level, 50 and the 61 level, you can see there is a nice candle, which is a doji. So let's take our profits there. Okay. And also, if you look clearly, there's also a very nice pattern. Okay, I'm gonna draw it out. So this pattern, the price moved towards this level and it dropped there. Let me remove this. And it dropped towards that level. And it moved there. Okay. So it should come back to this level. Come back to this level here. And you can see there is a candlestick that is of significant also. Okay. I think if you started, so from this level, then the movement was upside. Okay, let's change this into a line chart. Perhaps you can see the pattern. And I think the more we do this, you'll see you get to master the pattern. Okay, so the price started moving from this level, moved to there, right? And then dropped towards this level, and then moved that level. It broke above that high, it moved to that high. So I'm expecting the price to come back to this level here. Okay, maybe I should mark this level like this so you can clearly see it. Okay. Look at that. And this now times this pattern. Okay. Okay. And this also comes that pattern. Okay. And then you've got that side. Okay. And you've got that side. Okay. So the price from there, you can see this is 5, 11, 16.9, 23, 38.2, 50, and 60. So I'm expecting the price to come to these levels and start pushing further up, okay? Let's change this to candlesticks so you can see. Can you zoom in? Yes, we can. So now when you zoom in, you can see on the left, there's this type of a candle. There's this type of a candle in these zones. And if we highlight those zones, you can see there, this is 23.6%. You can see there is a doji. Basically, you can call it even a shooting star. The price dropped towards this level, lower than that, and the price break at this significant level here. The price break above. I'm expecting to come back above it and go further up. So this is basically looking for a short position, which should be in line with that candle. So the market should react around here, go further up, and then make a drop here, then continue pushing back up. While this is dropping, I was expecting the dollar pair to be moving up. Okay. All right. So since this was a bullish market, what we had to do, we had to, so a bullish market, when the price start dropping, it dropped by 5%, 16.9%, 23%. So the Fibonacci will mark the drop of the price if the price is bullish. If the market is bearish, this Fibonacci level will mark the increase. Okay, I hope that makes sense. Okay. If the price is bullish, the Fibonacci will mark, if the price is bullish, it will mark the drop, which is the decrease or the dip. If the price of the instrument is bearish, it will mark the increase. Okay, maybe we should look at the another instrument. Yeah, I think we're arguing with someone that this is also going to be moving up. Yeah. I think, did we analyze gold? I think this is a new high. Yeah, you don't want to be buying something at the high. So yeah, so no entries here, basically. Okay, let's look for another instrument. I think nothing much is happening on indices right now. Nothing much. Okay, because I'm still expecting them to touch this level. So far, it's been nothing but drops. Okay, so let's take some questions in the meantime. Is there any questions regarding the Fibonacci? Remember, the 5 and 11% and the 61.8 are not there in the original in your MC4. So you have to add them. Okay. So let me just show you. So for example, this has been this is the low, this is the high. So just to show you, click Fib properties. And if you look at the Fib parameters, the one that are not there, this is a 5% level. So this is a level that you add 0.05. Description is just 5. And the 0.11 is 11%. And the 16.9, you add basically 0.169. This is how you add it. So you click add. Okay, this is how you add it. And then the common factors, obviously, this is just you write, you want it to be red, you want a certain type of lines, you know, the Fibo level, you want what type of a red line, you want this type of a line. So these are just additional tools, okay? So in this case, the price of US tech there's been an increase of so much. Obviously, I think you can mark this level, okay, significant level that has reacted. But in terms of the price, it went bullish, okay? So the 50 and the 60 is there. So that is where you're expecting it to drop, and you can start buying at those levels once again. So the price can drop towards that level, and then you can buy towards that level. Again, it's not a clear cut, but that's the idea of using a Fibonacci. After an increase, those drops in those levels. Okay, that'll be it for tonight, guys. I'll record the session. I'll share the link. And then if you need more guidance, obviously, don't hesitate to book a one-on-one session. Okay? Good night.